Yeah, she actually kind of talked me out to getting into real estate. To be honest, actually, I remember that. She was like, I remember when I told her, she was like, "Are you sure that you want to like fix toilets and like they're gonna call you in the middle of the night, their toilet's clogged?" And I'm like,
Hey guys, it's George with REIClub with another edition of First and Worst. And today, my guest is a guy who you probably have seen on TV if you're in one of our lucky markets. But if you don't know him already, his name is Tony Javier. And Tony, how are you doing today?
"I'm doing great, man. Good to be on here, George."
Yeah, man, welcome to the show. Thanks for coming. So, Tony, you are all about TV ads these days, and we're going to get to that. But first, I want to take everybody back to what were you doing before real estate? So, take us back. When was that?
Yeah, we were just talking, and literally 22 years ago to this month is when I started investing in real estate. I bought a late night info product called No Down Payment by Carleton Sheets, which, if anybody's been in the business a while, knows who that is. He passed away a couple years ago, but he, for decades, did infomercials, which is interesting. You know, I found real estate through TV, and now I work a lot through TV commercials. And so I was waiting tables and going to college at the time. And so found the info product within, let's see, it was 5 months later. I ended up buying a couple properties, no money down, just like they'd said, and just kind of took off from there. But it's interesting to see how many people have bought that product and not done anything with it. So when people say, "Oh man, that product works," it's like, yeah, you just have to, just like anything, you have to take what you learn and implement it and figure out how to take it across the finish line and start somewhere, start doing deals. So that's how I got started in the business.
So, what did that first deal look like? How did you find it? And, take us through the numbers, too.
Yeah, so back then newspaper was big, which I guess newspaper is still around, right? But like, the internet was just kind of booming. When you went on the MLS, you had to download the MLS on your computer as opposed to it being on the internet now. That's how long ago it was. And I think just back then in 2001, it just came online within the last year to 2 years. Before that, I'm not even sure what they did for the MLS. I think it was printed. And so the first deal I found was out of the newspaper. I ended up, that's how they taught you in the program, was to go through the newspaper and find properties you could call on and make offers. And so I was going through the paper, I saw this deal. It said $19,000, for sale as is. I can't remember if it had the address in it or not. But any which way, I called the ad as a real estate agent. And she showed me the property. I put an offer in, and interesting enough, she's like, "I really think you should offer 19,000." And looking back, I'm like, I should not have offered full price. I should not have offered full price. I probably could have gotten it for 15,000 or 12,000 or something like that. And lo and behold, again, you learn a lot through this business. So there were some city violations on the property. And I ended up getting bids on it. It wasn't that bad, and I didn't even renegotiate the contract. So I did so many things wrong in that first deal. But the great thing is that I still bought it so cheap, and I bought at a time when they were lending money to real estate investors on the after repair value. So being 21 years old, I didn't have a lot of credit. I think I had my dad co-sign on that one. I can't remember. He did co-sign on a couple others after that for sure. But any which way, it appraised after it was fixed up at 60,000. So they lent me 80% loan to value, so 48,000, and I think we only spent about 15,000 in repairs. So I ended up getting it was somewhere between $10,000 and $15,000 back after the final refinance, after the renovations were done. So at 21 years old, having 10 to 15 grand in the bank after your first deal, tax free. Was pretty sweet, and I ended up loving that model so much. I ended up BRRRRing my first 10 properties. So I kept my first 10 properties, and that was within, I don't know, a year and a half to 2 years. So just in like a couple years, was I 23 years old then, having X amount of dollars in the bank, and then having several $100,000 in equity was pretty sweet.
Man, I couldn't even imagine that. So you got those 10 properties. Are you still waiting tables at that time?
Yeah, I forgot to mention that. I was waiting tables and going to school. So yeah, waiting tables. I ended up continuing to wait tables for about another, I want to say, year to year and a half. And then I ended up dropping out of college with 9 hours left to graduate. And I say drop out. Technically, I paused school, and I said, you know what? I've got 9 hours left. I want to invest more time into real estate. And then lo and behold, I just ended up not going back. So my mom still gives me crap about it to this day, but I'm like, Mom, that was 20 some years ago. I don't think I need to go back. I think I'm okay. So yeah, it's interesting because I literally didn't use anything in college to start my real estate investing business. And even to this day, if you asked me, is there anything that I learned from college that helped me to be where I am today? I can't think of one thing.
Not even basic algebra or the Pythagorean theorem?
Nothing. Absolutely nothing.
Well, it doesn't surprise me. I mean, shoot, I think if you gave a lot of 20-year-olds six figures and showed them the path of real estate, I don't think anybody would be going to college or waiting tables anymore. So,
Yeah, I'm not discouraging anybody to not go to college, but if you look at some of the most successful people in the world, most of them didn't finish college.
yeah, and a lot of them don't have the value. I mean, there's not a value prop once you're making that kind of money and seeing that kind of success that early. That's crazy,
Yeah.
man. So sorry, Mom, but I think we're all going to side with you on this one.
Yeah, she actually kind of talked me out to getting into real estate. Be honest, actually, I remember that. She was like, I remember when I told her, she was like, "Are you sure that you want to like fix toilets and like they're gonna call you in the middle of the night, their toilet's clogged?" And I'm like, still to this day, I don't think anybody's ever called me in the middle of the night, and typically they don't call me for a toilet clog unless it's just really, really bad. And then about I want to say. It could have been at least 5. It might have been closer to 10 years later. She called me. She's like, Tony, I've got some money. Do you think I could start investing with you?
Can I be
I'm
the
like,
lender?
nah, sorry, Mom. No, I'm just kidding. Um, but it's kind of funny how she came back around and she's like, oh, okay, you're doing okay. Can I invest some money with you? So,
Yeah, I'm sure that first part's scary for everybody, especially if you're watching your kids do it. You're like, I don't know, but shoot, after 10 years of crushing it, you come around.
yep, yep.
So, okay, but things haven't always gone great for you. I mean, every real estate investor is going to have their ups and downs. You saw a lot of success really early, which is phenomenal. But tell us about your worst deal. Tell us about a deal that gives you heartache or keeps you up at night.
Yeah, so it's keeping me up at night right now, actually. So after 22 years in the business, people are like, man, 22 years in the business, I've done over 1,000 flips to this point, right? So it's like people are like, man, someone that looks at my resume is like, man, this guy has it figured out. And I feel like I figured out a lot, but there's a deal about 2 years ago I funded, and this guy came to me. We were doing gap funding at the time, and he came to us and said, hey, I need $30,000 for a down payment. I've got this deal. The guy remodeled it. He was living in the property. It just needs a new roof, needs some foundation work. It needs some things, but he's pretty much remodeled most of the house. And I ran the numbers on it. I'm like, dude, this guy's going to make $100,000 on this house. And so I said, you're a newer investor. Typically, we do JV partnerships on those kind of deals. We don't just lend money. He goes, I'll tell you what. He goes, I'll give you 50% of the deal. I'm like, done. I mean, this looked like the most easy deal I've ever done for a six-figure I've only done maybe a few six-figure deals, but by far the easiest because it was almost done. It was like if my team had done this, it would have been a 60-day flip max, probably 30 days, right? The team that I have that does all my flips right now. And so after 6 months, he just kept having excuses of why he wasn't finished. And I'm like, all right, we're done. So I took the property back. He actually signed it over to me. I'm like, okay, perfect. He signed it over to me easy. Well, come to find out, he didn't pull permits. We needed to get an engineer report. He didn't do the foundation correctly. All kinds of issues with this property. So we dealt with the city of San Antonio. So if you guys are in San Antonio, watch out for the city, man. They're crazy. I think it took at least 3 months to get the permits, and then they're like, oh, by the way, you need an engineer report. So then we had to get an engineer report, and then I don't know, we had contractor issues. I mean, all kinds of stuff. So anyway, that was over 2 years ago that we funded the property. So COVID went through, the property went up in value, and then it came back down in value. In fact, it kind of went the other way a little bit because of some different things about the neighborhood, and it was the biggest house in the neighborhood and all that kind of stuff. So anyway, so we're getting ready to close on this. We're about a week and a half away, and title work comes in, and the guy had $300,000 worth of liens against the property. And we're like, what is this? Well, I made the mistake, and I don't know if it was because I missed that the property was put in our personal names, because we created an LLC. We had the paperwork, we had the whole thing, created an LLC, and somehow it got put in our personal names. And again, I can't remember if I just overlooked that or if it was explained to me that we needed to do it that way because the way the contract was written, but any which way it happened. So because of what happened, he everything he did personally outside of this property attached to this property, because it was in his personal name too. Even though he signed it over, it was still attached to the property because those things happened back then. So then we find out he claimed bankruptcy in between. We're like, oh, miracle, great. Well, all of the liens got wiped out except for one lien that was $20,000 that, because of attorney's fees, because of interest, because of all kinds of other stuff, is now $68,000. So we are fighting right now to get that last lien off the property and trying to negotiate. So I don't know if we're going to have to pay the whole thing, part of the thing, or if the company is going to be nice enough, seeing that the borrower that we lent money to is not on the property anymore, and if they will release it or not. But so it's the difference between, it's going to be about a $50,000 to $100,000 loss in dealing with it for over 2 years. And then if that other lien is attached to it and we have to pay the whole 68, which I'm hoping to God we don't, it could be easily over $100,000. So I've got probably one or two more of those properties that are fairly similar to that. And it's just one of those things where you lend people because you feel like the property is good and you feel like they're good people and are going to follow through. But for some reason, there's just people out there that just don't know how to execute, and they take advantage of you. Because I looked at the renovations he did on the property. He collected $40,000 worth of draws from the lender and maybe did $10,000 worth of work, maybe. So he pocketed $30,000, and we had to go and clean up his mess. So that's probably the worst deal that I've done to date, and it just happens to be something that I'm dealing with right now. So.
Ouch, man. So what do you think we could take away from this? What can we learn? How can we avoid people like this? Was there a sign? Was there anything that you could have seen going in?
Yeah, so I'm very particular. I mean, we do pretty heavy due diligence. So I hired someone fairly new at that time that was helping me do due diligence. And they did not inform me that there were some things on the credit report, because I went back and looked at the credit report recently, and I'm like, my assistant here, who wasn't there at the time, she's like, I don't know how we lent money to this guy. Look at his credit report. And I'm like, oh my gosh, there's so many red flags. So that was one thing. We did a background check and everything. Background, I think, came out okay. But the biggest thing is lending to a brand new investor. And he was a contractor, right? So I just thought, you know what? He doesn't have a lot of experience, but he's a contractor. So he's got to execute this, fairly, and of course, looking back, I'm like, what am I thinking? Well, there's a lot of contractors that aren't good contractors, but I thought since he was a principal on the property, he would actually follow through. So if anybody's looking to get into the lending business, I would say, figure out how to have first position on the property. We had second position technically, even though we were joint venture partners. And the other thing is that, so first position, and then make sure they've done at least 5 flips. So a lot of hard money lenders want at least 5 flips under their belt, and we kind of didn't adhere to that because we were doing JV partnerships and we were charging higher interest rates because they were newer investors, thinking our returns would be much higher. So that's kind of backfired a little bit. And I would say if anybody's looking to do lending for flip properties, make sure they have at least 5 flips under their belt. Maybe even 3 would be okay, because if you do 3 flips, typically you kind of have some ideas of what you're going to run into. If someone can complete 3 successful flips and make money on them, chances are the next one that you do due diligence on and you run your numbers correctly, they should be able to perform. And then just run background checks, credit checks. Stick to your gut and have what they call, in business terms or in real estate investing flip terms, they call it a buy box. So if we decide to do this again, we would have a lending box that says that we're only going to lend property or lend money in certain states or areas. We're only going to do a certain loan to value. We're only going to do a certain price point. That's something that this is a higher price point property, is about 500,000. And then the parameters of the borrower as well. So a lot of lessons learned there that, I kind of took it upside the head a little bit, but it's something you learn your lessons, and hopefully the lessons I learned from this will go into other business ventures that will save us a lot of money in the long run.
Whoa, Shash! I hope everybody listening is paying attention to this. The idea of the buy box and establishing your rules and not stretching it because it's the deal of a lifetime. They always say the deal of a lifetime happens once a month, so it's never the deal of your lifetime, right? And I hope you save us that kind of money, and I hope you get out of it relatively unscathed, man. Yikes. Hey, this is George. If you're enjoying the show, please leave us a comment or drop us a like. It really helps us out in getting this show out to more people to learn more about real estate. And I can do that without running a bunch of really annoying ads, which nobody wants to hear. Just me, right? You just want to hear my beautiful voice. So please drop us a comment, leave us a like. Really appreciate it. Thanks so much.
Yeah, we made some money on some other deals. We were getting some pretty good returns because when we're in a second position, we have to charge a pretty high interest rate. So when it's all said and done, I mean, we'll be okay. Obviously, it's nothing that's gonna, take us down by any means. But man, it's been a lot of time and energy the last couple of years of looking back and saying, man, we just lent to the wrong people and probably took our eye off the ball because, the thing that was producing most of our income, I kind of had to take my eye off of that a little bit to start this. Mm-hmm. And then this was 99% of our problems and 99% of our income was over on the other side. So definitely lessons learned from chasing shiny objects.
So Tony, what are you working on now? What is your big thing? You kind of just alluded to it.
Yeah, so the thing that I spend most of my time on right now is helping real estate investors with TV commercials. So, like I said, I've been in the business 22 years. Let's see, it was 11 years ago that I went to kind of discover TV commercials on accident. So the way it happened is I went to a poker game. Actually, no, let me back up. So I went to a networking event, and I wasn't supposed to go to this networking event, and I got really sick, and I started getting a little bit better, and someone convinced me to go to this networking event. And I'm like, okay, it was like Christmas time. It was December. It was cold. So, being sick in the cold, I just didn't want to go. Anyway, I pushed myself to go, had a couple drinks, and I met this guy named Brian. And, Brian's super outgoing. He's a realtor. He was a great follow-up. So he knew I'd been in the business a while. He had been in the business for probably just a few years, so he's calling me, picking my brain, and all that kind of stuff. Anyway, we become really good friends. So a few months later, he invites me to a poker game. So I go to one of his friends' house. I think I'd met the guy once before. So I go to his house. We go downstairs, and there's a couple poker tables. And sitting at one of the poker tables is a guy that I've noticed from TV. I'm like, holy crap, this guy's on TV, So I get this whole celebrity factor, thing in my head. Man, it's kind of cool. I'm playing poker with this guy on TV, whatever. And so I sit next to him, and I was like, hey, Chad, nice to meet you. I was like, hey, man, I see you on TV all the time. How are your TV commercials doing for you? He's like, dude, we do millions and millions of dollars a year from TV commercials, and that's all the marketing we do. And I'm like, really? Because you hear TV is just branding, that kind of thing. And he's like, because I told him what I do. And he's like, I don't know if it would work for your business, but why don't you call my guy, Drew? He's really good at media. He can negotiate rates for you. He can do, produce commercials for you. He can do everything for you. I'm like, oh, okay, cool. So I reach out to Drew Monday morning, and I said, Drew, I heard you're the TV guy. He's like, yeah, let me learn more about your business. He's like, I'll go to the stations. I'll kind of get some rates for you. And we'll kind of see where it goes. And so he comes back to me, I don't know, a week, 2 weeks later. He's like, man, I got some really good rates for you. I was able to get you, I think it was like 500 commercials for $3,000 a month. And I'm like, wow, that's insane. Like a decent direct mail drop is probably double that, right? And so I'm like, all right, let's give it a shot. So I wrote the script. He set me up to shoot the commercial, all that kind of stuff. And first month I made $35,000. And so I'm like, wow, okay. And so over the last 11 years, it's been by far the most consistent lead channel. It's been the number one lead channel, and it's done something amazing for us. So over the years, as I tell people I do TV commercials as my number one marketing method, everyone's just like, really? Really? Like, I only had one person that called me a few years ago and said, tell me what you're doing. How do you do it? And I ended up helping him before we launched our program. And he's still crushing on TV 3 years later. So anyway, finally, about 2.5 years ago, someone in one of my masterminds, a high level guy that runs a big podcast, he's like, why don't you show people what you're doing? Like, you obviously have something. I bet if you packaged it up and you gave it to other people, they could figure out how to do TV commercials too. And I said, you know what? Better yet, why don't I go to my media guy, Drew? He's been doing TV commercials for 25 plus years. Him and I have been working over the last, at that point, 8 years on our TV commercials. We've tweaked the schedules. We've tested different scripts. I mean, we have a lot of data over 8 years. And I said, hey, if I show people what I'm doing, would you help negotiate the ads? Would you help produce the commercials, help shoot them, do everything that you did for me on the back end if I, find people, do the customer service and all that kind of stuff? So we launched that a little over 2.5 years ago. I went to, you mentioned Dean Rogers, who you just had a podcast with. He's a good friend of mine. I actually referred him into the mastermind that you and I are part of. And he started TV with me and about 6 other people. So I just reached out to people I knew and I'm like, hey, I'm going to run TV commercials for you. So we tested it and it worked pretty similar like it did for me. Almost the first month, almost everybody was getting deals. They were getting a ton of phone calls and they were getting that celebrity factor of people like taking pictures and sending them to our clients and being like, holy crap, I just saw you on TV. Like, congratulations, you made it, all that kind of stuff. And so I knew I had something. And so we did a hard launch and we officially launched. It used to be called Real Estate Masters TV. For those of you who've heard of that, now it's called 10X TV. And now we have over 100 real estate investors running TV commercials with us. And it's totally revolutionized the way marketing is done for real estate investors, because before this, nobody else was really doing TV to find motivated sellers. And so we were able to use our data, our formula, our scripts, everything we'd created over the previous 8 years. And I call it the franchise-like system because it's kind of like McDonald's. McDonald's figured it out. They have processes, they have systems, they have marketing that worked, and now they just plug it into other markets. So we do the same thing for real estate investors, and the results have been unbelievable. Where a lot of our clients are getting not only a 5 to 10 times return on their money, but they're also getting the credibility, the celebrity factor. It's helping their other forms of marketing because if people get a stack of postcards. Think about it. If they get a stack of postcards and there's, let's say, 10 people in that stack and they notice you from TV, guess who they're going to call first? They're probably going to call you because they notice your brand and they know that you're credible, or they feel like they know you're credible. Whether our clients are credible or not, I can't tell you. But we've had many deals throughout the years where they said that. They're like, we're calling you, but only you because we know who you are. Not only that, but when we go and negotiate with the seller, we've had many people come back to us and say, you're $5,000, $10,000 below the highest offer, but we've seen you throughout the years on TV. We know you're credible, so we feel like you're going to close. We don't really know these other guys. We kind of don't have a great feeling about them, or we're a little skeptical, so we're going to go with you. So there's just so many benefits of TV above and beyond just the direct returns we're getting for clients. I proved it in my market and I've proved the longevity of it. We're now 11 years in and we fluctuated between a 5 and 12 times return on investment pretty consistently like our clients are. We just did our numbers for last year and I think it was just under 6 times return. The previous year before was almost 12 times return. So it's something that's done great for us, and now we love helping real estate investors get direct motivated seller leads that are very motivated, that aren't tire kickers, and help them improve their celebrity factor in their market.
Yeah, I can tell you the guys who've done TV in our local market here, instantly, I mean, you see their businesses just blow up. You see them start hosting bigger events and bigger crowds and more people bidding on everything. And so I've seen it from the competitors, which I don't really love, but hey, good for them. It still works. It's surprising, but it works. Um,
Actually, where you located again, George?
we're up here in Spokane, Washington, is the TV
Okay,
market.
I have a client. I have a client there.
Yeah, so it's probably
I'll tell
him.
you who it is off. It's probably him. I'll tell you who it is offline because we try not to disclose our clients unless they want us to or do a testimonial. But I bet it's one of our clients that you're probably referring to.
Probably. He's got a good jingle and everything. It's super catchy. I can hear it in my head right now. But
Yeah.
Tony, does this work only in bigger markets like, the LAs, the Seattles, or what? What kind of markets do you find this works in?
Oh, we've had it work in every market. We've got LA is the number 2 biggest market in the U.S., and we have a client spending quite a bit of money there. It's actually more expensive in the bigger markets just because you're hitting more people. So it works. It can work just as well in those bigger markets. You just have to spend more money. But the thing that I love is the smaller to mid-sized markets. Reason being is that there's not as much competition. And when I say competition, let me rephrase that. The rates are usually less expensive because they're not the big markets that some of the big players buy ads in, and not just in real estate. I'm talking about all over like all industries. And you can spend a pretty reasonable ad spend and get in a crazy return. We actually have some clients in some small markets that are getting like 20 times plus return on the investment because their ad spend is fairly low and they're getting a ton of calls. And when I say a ton of calls, they're getting like over 100 leads a month on a small ad spend, and they're converting those leads at a high level and just absolutely raking it in. I've got one guy in particular. He would text me all the time, and finally, because he would be like, "Man, I did another $50,000 deal. Man, I did a $100,000 deal. Man, I did it." And finally, I got him on, and I said, "Hey, tell me about the last 6 months." And he's like, "Literally, I've made over $100,000 every single month since pretty much almost since we started." And he said, "This month it looks like we're going to do over $200,000." And he was only spending $5,000 a month at that time. It's crazy. So yeah, it can work in pretty much any market. There's only one market's been tough. It's been New York because it's such it's like 20 million people that you'd have to hit with TV. LA is the second biggest market, which is 15 million, I want to say, or something like that. So it's pretty massive too. So those big markets can work because we have clients that are doing well in those markets, but those small to mid-sized markets, man, are crazy good.
So Tony, what would be a smaller mid-sized market?
Yeah, so small to mid-sized market would be just top of my head, like Tyler, Texas. We're running TV commercials there. That's about 1 million people. So it's a small market because Tyler, Texas is small, but it hits a lot of the surrounding areas. No, I take that back. It's probably closer to 600,000 total. Chattanooga, Tennessee is probably 500,000 to 1 million somewhere, 500,000 to 1 million, somewhere in that range. We have a lot of Southeast markets like Columbia, South Carolina, Myrtle Beach, South Carolina, where there's probably 200,000 to 300,000 households, which means there's about, I don't know, 700,000 to maybe 1 million people, which 1 million people still sounds like a lot, but for TV markets, that's still kind of small. And you can spend, a pretty small ad spend in those markets and get a ton of phone calls. And, oh gosh, what else was I going to say about that? But yeah, so the small markets, the great thing about those is you're going to get a ton of commercials for a small ad spend. So to give you an idea, a Columbia, South Carolina, just off the top of my head, I know for every $5,000 you spend, you get around 1,000 commercials a month. That means we're only running weekdays mostly, so 20 days. That means 50 commercials every single weekday are being played, which means that you're hitting a lot of people. And if you compare it to direct mail, just to give you an idea, so direct mail, if you send 1,000 mailers out and they're postcards, which is the cheapest kind of direct mail, you're still going to spend about $500. If you do it really cheap, $400 maybe, you might be able to get it down to that. Whereas with TV commercials, guess how much money it takes to hit 1,000 people with TV?
I don't know, $5,000?
$5.
That's crazy.
So it's like 50 to 100 times cheaper in most markets to hit people with TV commercials as opposed to direct mail. Now, direct mail can be a little more targeted, obviously, but the good thing about TV is there's people that aren't on those lists. There's people that are, you could buy all the lists in the world that you want to, but there's some people that just aren't on those lists, right? And so you're going to hit those people that aren't on those lists. So as you can tell, I'm a little passionate and get a little jazzed up about TV just because it's very unique. There's not a lot of competition in most markets. And we just have it dialed in because when someone launches TV, it like literally within usually the first week, but definitely within the first 2 or 3 weeks, we typically get messages like, holy crap, our phone's ringing, we're doing deals. Had a guy the other day that said he got 6 deals in his first month, which, most investors are doing 15,000 on average, at least on each deal. We had a guy launch in a big market. I won't say which one it is, but what did he do? I think he did like somewhere between 5 and 10 deals, and he told me his profit margins. So I know that he blew it out of the water his first month. And like you said, he has a meetup, and Dean Rogers, who I mentioned earlier, he actually utilizes his TV commercials for credibility. So when he started his meetup before, it was kind of small and getting a little bit of traction. Once he started TV, he noticed that people were reaching out to him more. Then he'd invite him to the meetup. Then people who had come to the meetup would treat him differently, and they would invite other people. So anyway, he grew it big enough to where he generates $1 million in JV partnerships from people who come to the meetups who he teaches how to find deals and bring them to him. So I can't attribute all of that to TV, but he's like, dude, once we did TV, our meetup group just blew up. I think this last event he did, he had like 600 people. It's insane. So I think it's a no-brainer if anybody is doing deals, but especially if they're trying to gain credibility in their market by doing meetups and doing education and things of that nature. It's just a no-brainer for sure.
Yeah, and like you said, it's way cheaper than, to reach 1,000 people than direct mail. It's less targeted, but it has that celebrity effect. I mean, like, you become a celebrity in your market, so even if you aren't hitting the people, the motivated sellers themselves, you're reaching their family members, and then the family member goes, hey, I saw this guy on TV. I remember the jingle in my head right now. Just Google him, find him, and you can get a bunch of deals that way. I mean, it's really a broad net you're casting with TV, and, you can't just throw away a TV ad. That thing... I don't even never gonna sell my house to a wholesaler, but I know his jingle. It's in my head, literally rent free right now. So that's just way more powerful than direct mail. Direct mail, I throw those things away before they even come in the house. So it's powerful.
Yep, exactly.
Powerful stuff. So Tony, why do you call it 10X TV? That's the name of your company now. Why 10X?
Yeah, well, interesting enough, a lot of our, I say a lot, a chunk of our clients were getting a 10 times return on our investment. So I kind of started playing with that in my head. I'm like 10X TV, and it just kind of like flowed off my tongue, right? And so it was originally called Real Estate Masters TV, and we do TV commercials. We can do TV commercials for any industry. We just happen to specialize mostly with real estate investors because that's what I know. And so we just decided to call it 10X TV. And then I thought, okay, we're getting 10X returns for a lot of real estate investors. What about those that aren't getting 10X? I don't want to promise people 10X or that be their anticipation, because even if you get a 3 times return on your investment, that's still good for TV commercials because of all the other aspects of TV and all the other benefits. And so I thought, you know what, we're probably hitting 10 times more people for the same ad spend. So just like I mentioned to you, it's probably closer to 50 to 100, but we're probably hitting 10 times more people for the same ad spend. It's at least 10 times more credibility. I feel like it's 10 times easier because once you set it up right, Dean Rogers, he didn't change his commercial for like a whole year. We set it up right for him. We dialed in the script. We dialed in the ad spend. He didn't have to touch it. I think even after a year, he just wanted to freshen it up, which is what I do. Once a year, I'm like, we're getting a good return, but let's just freshen it up. Let's just do something different. So as opposed to managing direct mail lists, as opposed to skip tracing and cold calling and texting and all that, I mean, it's probably 100 times easier, right? And what was the other thing? 10 times more credibility, 10 times easier, and hitting 10 times more affordable. So it's definitely, there's probably way more 10Xs that I could put on that with other things. But it's just a lot easier. It's a lot faster. It's a lot more credibility. Like it's such a no-brainer. Like if anybody's doing deals, and it's crazy because when I launched this, I'm like, is it going to be hard to get people to commit to doing TV commercials? Because it's a pretty decent commitment, you know. It's a month-to-month agreement, but still, you have to shoot the commercial. You have to, you know, there's some things that you still have to do. It's not much because we do most of it for you. But lo and behold, man, like when I get an application that comes through for someone to work with us, I can look at it and I can tell you 9 times out of 10 whether they're going to commit or not. Because if they're doing deals, they're already spending money on marketing. It is an absolute no-brainer. It's just whether they have the money at the time, it's good timing for them, and whether their wife lets them do it or not. So,
The all-important veto power.
yeah,
Oh,
the
man.
decision maker.
I mean, the power of TV, guys, is not only getting a return on your ad spend, but it's also building those invisible things like your brand and your reputation in your market, which are just, you can't put a price on those things. So if you guys are out there doing deals, you know, you're already spending money on marketing, buying lists and cold calling and all that stuff. Adding TV to your mix could be really powerful for you guys. I mean, you've heard Dean Rogers, his meetup went from like 50 people to 600 people once he started running TV ads, and that's really the power of it. It just builds your reputation, and people just are magnetized to you once they see you on TV. So if you guys want to learn more about Tony's program, 10X TV, just go to reiclub.com/10XTV, and that's the letters X, T, and V. So reiclub.com/10XTV. And Tony, thanks so much for being on the podcast. I hope everybody goes and takes advantage of this and here's what you have to say, sees what you have to offer them. Because for, man, real estate investors, even in my area, the guy who's on TV first, he's crushing it. Now it's, you got to be second fiddle. So really cool, really powerful stuff, man. Thanks so much.
Yeah, thanks for having me on, George. I appreciate it and love what you're doing over there. So glad we could jump on and do a podcast together, and look forward to continuing to collaborate.
Awesome, man. Well, if you guys want to check out Tony, don't forget, reiclub.com/10XTV. I'm George Uno. Catch you guys on the next episode of First and Worst. Thanks for listening in. Hey, I hope you enjoyed hearing that story. If you want to have your own nightmare deal, go out on the internet and download a free proof of funds letter the next time you're making an offer. Then, when the seller or their agent calls that number, no one picks up the phone, and you lose that deal. Or if you'd actually like to get the deal under contract and be taken seriously, go to reiclub.com/proof and download a proof of funds letter today from one of America's best private money lenders in the space. So that's reiclub.com/proof. Go get your proof of funds letter today.